presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. I know I didn't retire this card yet, folks. Doing your best means to take action on your ideas. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials down 476, Nasdaq's off 96, S&P's off 48. Gold contract down $4, trading at $19.05 an ounce. Got silver down 46 cents, $23.60 an ounce. Light sweet crude down 81 cents, $79.37 a barrel. Notes and bonds. 10-year note up 1 full point plus 8 ticks at 115.29. The 30-year is up 2 points plus 12 ticks at 132.02. And King Dollar is up 28 ticks, trading 102.416. Euro is at 107. Yen is at 128.82, and the British pound is at 123 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Can you say failure on price and volume? Check it out. So we were talking about it yesterday. We'll put the SPY up first, just so you can see how this thing has been shaken out. So if we take a look at this, what you're going to see is this, okay? Bottom line, yesterday, we get over the high, closed underneath it. Volume was only 63 million. You're going into 137. Bottom line, giving it up. Right now, we've already done 65 million. So this is saying, you know, this is going to do 75, 80 million. So you're going south, your volume picking up. We go into the NDX 100. We take a look at the NDX 100. What do you have on this side of the NDX? What we have with the NDX is this. Same type of setup with the, well, no, it's not the same type of setup because with the NDX, what the Qs actually did, they got to a higher high and they gave it up on price. And it's still going to be, you have 36 million now, you probably do 46 million. Well, you're going into 60 million. So bottom line, gave it up on price. We go to the gold contract. We take a look at the gold contract. Gold contract out here, we've had a spread since 1929 to 1898. Same type of setup. Now, what the difference is here, and this is, you know, which is still good for gold, is this. So we were talking about this yesterday, that I think we're setting a B to C of an ABC structure up inside the gold market. So yesterday you hit high, and we hit the last 3 days prior to today, folks, you were going higher and you had volume behind the move. That being said, though, what you also have is that we have an aspect that from the very low that was established out here on November 3rd, you very well, bottom line, had another ABC structure up, and that price projection was $18.95. So now we're going to get a pullback going. The real bottom line, as long as it pulls back on lighter volume, you very well may be setting a much larger ABC structure going higher. And it's still all about the dollar, because if you were in front of a machine today, folks, this was something else, man. The dollar, okay, first off, the dollar had broken its swing point about 3 days ago. The dollar traded down to 102.528. So we've gone higher 900 ticks off that low. And maybe this is one going to get the bounce. So my take is that you're going to get a counter trend bounce on the dollar. That just puts more destruction inside of the market. And we'll see where this shakes out. But it's certainly the correlation once again was there that a higher dollar bottom line turns into the aspect of a lower market. And today you can kind of see it in spades, because if we take a look at the dollar start rallying at 10:20 this morning. And if you go over the S&Ps, you're going to see, I mean, it was so direct, it's unbelievable. And this morning, you know, if you haven't been in the Tiger's Den, folks, okay, do yourself a favor, do us a favor, come on in the Tiger's Den. We have a great community in the Tiger's Den. You have a lot of great tigers and tigresses. It's great trading, great camaraderie, the whole ball of wax. And, you know, the bottom line is this morning, what was so weird this morning, folks, okay, is that the dollar was getting destroyed and the futures were only up 12 points. That made zero sense to me at all. That, you know, the bottom line is that, okay, this market doesn't want to hold, you know, because what should happen is that when the dollar, you know, the dollar was down 900 ticks. And when you have something like that, you know, the bottom line is that the S&P should have been up like 50. Anyway, you get the gist of it. And the sell-off was dramatic, and the sell-off was fast. Now, let's get over to that bond market, because the bonds, there's all divergences here that are taking place. So what the bond market did is this. The bond market's caught a bid. Oh, it's going to be interesting to see if we get an ABC up here, too. Listen to this. See, this is wild, man. Okay, so we take a look at this. No, it's not going to be ABC up because we had so much volume last Wednesday. So you're coming into 2.3 million contracts. You've done 2.07. You know, but bottom line, you know, that's saying it does want higher price, and the yield right now, we haven't seen this yield for a while. The yield is 3.3 on a 10-year. In fact, let me bring this back 6 months, because this is the low for the 6 months. I mean, for 3 months. Let me 6 months. Yeah, 6 months is 2.5. Bottom line is that you'd think, and this is where it always gets intriguing in the marketplace, you'd think the aspect that if those yields would be going down, you know, the bottom line is that, okay, you know, markets should like that, right? Well, guess what? The markets haven't finished what they're looking to finish. That's the real bottom line, folks, okay? If we take a look at some of the higher volume equities, we have Tesla off $2.50. We go down, well, let me go this way. Let me do it this way. So inside the Dow Industrials. Inside the Dow Industrials, you have point-wise out here. You have, look at that, Goldman's up putting 9 positive points. The rest of them, see you later. You got Honeywell minus 44 points, Big Mac 44, United Health 39, Amgen 34. If we go inside the NDX 100 and we take a look at the NDX 100, Moderna's up 3.5%, Qualcomm's up 2%, you get Lucid up 9/10, taken away from it. Kraft Heinz is down 5.8%, Pinduoduo is down 4.8%. Warner Brothers is off 3.7%, and Datadog is down 3.3%. Stay right there, folks. We'll come right back. Our phone number is 877-927-6648. Dow Industrials off 467, NASDAQ off 93, S&P's off 47. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 491, Nasdaq's off 98, S&Ps are off 49. So let's go take a look at the Dow Industrials first and see how this baby's lined up. Because what we had, folks, the Dow was the leader on the way up here. I mean, the Dow almost hit its highs again. So you're coming off it. The bottom line is, now it wants to go right to the bottom. The bottom on the Dow's consolidation is 32,580. So you get about another 1,000 points down here because you can see quite clearly, what you just did out here today, you just broke the uptrend for sure, and you're coming into the strength. Now, we had strength out there up to 33,710, but you can see what happened. It just came into that area, took it apart, and we'll see how the rest of this shakes out. But bottom line, Dow wants lower price. We go take a look at the S&Ps intraday. So let's look at this intraday because intraday, this has been a one-way ride downtown. As the dollar went high, as the dollar rejected lower price, that's what it did. The dollar hasn't really moved, but it was down 900 ticks and it rejected lower price. Now the kicker is going to be, and there's plenty of time, we're only at 319. So now this is what the danger is going to be, folks. The danger is going to be, number one, that it goes after the low before the close. And I suspect what we're going to see is that it's going to test it in the next 5 minutes because you can see what happened here on this bar. You had this bar, and you see the bar? Okay, so we're 9 minutes into that bar. Now, that bar has decent volume. The problem is it didn't make the swing intraday. So now you have volume. You don't make the swing. That says that as that little pop came in, someone's selling into that. Now, the real question is going to be, how does it hit the bottom of this? Because if we hit the bottom of this and we do 43,000 contracts in 10 minutes, that's going to be a monster ABC Dow. That's how that shakes out. We go to the NQs. We take a look at the NQs out here. Same deal just happened with the NQs. So we'll see how this shakes out, man, whether it's going to go after these lows or not. Oh, hold it. We already have it once. Let me see this. 1 second. So that's 15,000. That's 11,000. That's 14,000. No, I just missed doing an ABC down earlier, So It'll be intriguing. Let's go to the GDX and take a look at some of these gold equities. So if we take the GDX, okay, is the ETF structure for it. You know, what you had yesterday, you came down on volume yesterday. This is a tricky one today because, like, did you try to go up? Because we were as high as 32.23, kind of gave it up. You know, that's not telling us much. I suspect what we're going to see with the GDX is that, you know, we're going to make it at least down to this $30 level. You know, you get a gap that's wide open. If you get another, what's going to happen here is that if we get another day like this, let's go to the XAU. Let me put this. Oh, I know how to do the GLD. That's what we want to do. Because so the GLD is 10% of the price of gold, except that the difference is that because the GLD has been trading for so long, folks, and each year the expense ratio is 0.40. So, you know, you can do that 10 years is 4%. You know, so it's a big deal, okay? So if we take a look at the GLD, what you're going to have here, 178. This is interesting. So now what you have with the GLD, which is not great, is that you got over the highs, and you have lighter volume, and you're giving it up on price. So that's saying, you know, the bottom line is that we want to pull back also. That's how that baby is set up. And I'd pay more attention to the gold contract. Okay, let me go back to the E-mini. So I want to, let's pull this up, because when I pushed out that it could be an ABC structure down, it's to where, and we all should know that. So here we go. Let's go. So let's do this. It's a monster one too, man. Okay, so you got, what do we got here? Let me see this. That's 4. Okay, so high today, 40. Okay, 4033 would be A. The B's all the way down there. It's going to be a monster, man. 3956. So you get a 77 A to B. And if the C's there, minus 3971, 3894. Yeah. No, I'm glad you did that, because I didn't bring up what the number would be. So 3894. Let's just look at this, because this is what does happen, folks. So this is what's cool too about understanding how just ABC structures are, that you should at least do the price projection. Doesn't mean that's going to happen, but when you do the price projection, you have more information. And it's always about what is the information you have, and what do you want to do with the information. You know, we know that, listen, you know, ABC structures are pretty consistent. So if we go to 3894, what is that? This. Yeah, well, I think that brings us back to the top. Yeah, it does. Okay, so this is pretty cool, actually. This brings us, now this brings us, if we get that, right, it brings us to the top of the consolidation where you broke out from. You know, okay, so now let's speculate that that's where you go. So, if that's where you do go, and we back down with light volume, what's going to happen is that is actually going to be a buy. Because you got to remember, we have high volume here. That's the, what day is that? That's the 27th. We have high volume here when we broke topside. So if that's all it can do, and if it goes back with light volume, then we're going to stay in this consolidation. If tomorrow, if we finish at lows today, and then tomorrow expands down, the volume expands, then you go into the lows. Then you go into the lows. Then you go to those lows, and then we'll see how this thing shakes out. What you can see in the marketplace right now is that we definitely have divergences, because, you know, the bottom line is that we had the divergence this morning was that the dollar was getting crushed, and yet the S&P could only go up 13 points. And that's after the PPI came out, okay, and retail sales. Once the market got going, the market is evidently not paying attention to the bond market, either the 10 or the 30, because this is the lowest interest rate that we have had in 3 months, okay? And you think that, okay, so these different dynamics, folks, just continue to happen. You know, the larger deal is keep your eye on the larger ABC Dow. It's still in place. That's the bottom line. Dow's down 486, 476, Nasdaq's up 94, S&Ps are up 48. Stay right there, folks. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 496. The Nasdaq's off 99. S&Ps are off 50. Now, if anyone out there, let's walk through this for a second. And thanks for bringing this up in the den and the YouTube deal. So DWAC, folks, Digital World Acquisition, right? Now, this is the company that the bottom line is that Donald Trump, when he got canned off of Twitter and Facebook, okay, bottom line, this was going to be the vehicle that he's going to use. And I want to walk through this like slowly so you can really understand this. The stock's trading at $16. The stock's only worth $10. That's how it works, folks, okay? And as I walk you through this, you're going to make the decision what you want to do, but this stock is only going to be worth $10, and what we're going to see is that the actual sponsors of this equity are going to lose hundreds of millions of dollars, and this is why. So what happened is that this company here, if we look from highs to lows, it went from $101, well, it went from $10 to $101 back to $14.80, okay? But the reality is it's only worth $10. That's how they all work. Now, what has also happened is this. They got extensions to do the acquisition, okay? The extension is going to be another 2 or 3 months. They're not going to get it done, and the reason they're not going to get it done, I suspect, is that what Trump has formally requested to go back onto Facebook. So if he requested formally to go back onto Facebook, that's saying that he's going to use Facebook again. They're probably going to let him on there. Musk, I don't know why he's not on Twitter, because he was invited by Musk to go on Twitter. So that's my point. My point is that now they don't have the star in order to get it going. It's worth $16, man. You're only going to get 10. And the real question is going to be, does the sponsor, I suspect the sponsor does have a couple $100 million, because what has happened, that's why you saw so many SPACs close in December, folks, because 2 different things end up happening. If you didn't do the deal, what has also happened is that now there's a penalty for any company that's buying back stock. So they're not only going to lose all the money that they had in marketing, then they're going to lose on paying everyone back. Because what ends up happening is that everyone that owns this, you have the right to vote whether you want to do the acquisition. So it is what it is. And that's, that's going to be another downdraft in the context of, social media and where this whole thing's going. There we go. Let's bring it across. And it just broke it. So it just broke the low. On the break right now, let's see. We got, okay, this is going to be interesting. It's only 2 minutes into the break. If we get more than the 4,300 contracts, folks, you get a monster ABC down. That's how this is shaking up. Right now, you have 16,000 in 3 minutes. So that's saying we can get it, man. If you get this, baby, yeah, what time is it? Oh, it's only 3:30, man. We have plenty of time. This is a monster move, man. This is just a monster move. We'll see how it shakes out. We'll go to the NQs for a second. Now, the NQs had further to go down. But I suspect, when one follows the other, it's on its way. Now, the NQs need, it's not at the swing point yet, so it's not really going to matter at the swing point. Let's see. WE, one of the targets I want to look at here. So this is WeWork. Okay, so we know this is the co-working space. The low, 52-week low is $1. The high is $9.40. This company just continues to bleed money. I mean, it always blows my mind, folks, is that you take in $3.3 billion and you lose $2.45 a share, and we have, oh my God, so they're telling you they're going to lose $1.4 billion. But bottom line, let's take a look at the chart. So let's see, it looks like it could be an ABC in the making. Okay. Okay, so let's see what we got here. Let me put this on a weekly. Yeah, I mean, I wouldn't touch this thing. Yeah, I wouldn't touch this thing. I mean, this has been a one-way route. I mean, I've mentioned many times that when you see the big volume that we had like 2 months ago, and you can't take a swing point out, that's always a problem. We got up to, what, $1.08, and the swing point's way up there at $3.27. That is something that can be a real problem. It wouldn't. I wouldn't even trade it. If you trade it if you trade anything intraday, that's one thing. But laying overnight on something like that, is just not where it's at. That's what it comes down to. Let me go look at Microsoft. Microsoft's laying off a lot of people, man. That's pretty intense. So Microsoft filled the gap. Coming off the gap. No, Microsoft's not bad. They're probably going to stay in the consolidation. You got all the way up to 241, 242 today, or 236. The thing that is a mind blower about Microsoft, there's no doubt about it, is that Microsoft has been moving $2 to $6 every day, and that is so unusual for Microsoft. I mean, it just is. Let's go to Google, and we take a look at Google out here. Yeah, Google can't move. In fact, Google, this is going to be a failure on price and volume. See what's happening here? Google was coming into 34 million shares yesterday. You can only do 22, and today you did 14. You got over the high, and you're going to close underneath it. Not good. And we got to go look at Apple. Oh, and Amazon. Apple, yeah, coming into, what, 98 million? Look at this. Coming into 98 million shares, and it's only done 54 and he gave it up on price. Apple's going right back down to the lows again, man. I mean, we'll see whether the high or the low can stop it, which would be 130. The low that's laying out here is 124. And then we go to Amazon. What does happen here, folks, is this. This is where, you know, bear markets, okay, are very dangerous in the aspect. Amazon, same deal. Yeah, Amazon probably staying in consolidation. What happens in bear markets is this, and this is where the real danger part comes in. If I'm correct in the assessment that we're not finished going down yet, that everything, you know, I can picture why people say that, oh, that October low looks good. I get that. I get it, trust me. But it's an ABC down. So I go with the ABC down. It broke the swing point, broke with volume. It wants to get down there. What has just happened, because, let me put the index up. Because, you know, we're talking now that we're, you know, bottom line in, you know, January 18th. Well, it's a long way from, you know, the October low. That being said, we're not that far off the October low. And if we actually take a look at the aspect of put this up and, you know, you look at the type of retracements that we had, well, it was a decent retracement. It's saying at this particular point that the first leg down, you will not break it because we did more than a 0.618 retracement on the way back up. Well, that being said, it doesn't mean that you don't go down to the bottom and you start trading sideways, which is very dangerous, and then you blow through the whole deal. You know, we're in earnings. Earnings are going to matter. Earnings are going to come out. And I think, you know, what matters more is that, guess what? Yeah, we're in a pullback. Rates are going to lay out here and stay out here for a while. And I'll tell you, if we have another day like this, meaning tomorrow, and the rates go up and the market goes down, as one of our tigers is just saying there, that's the ultimate stagflation. There's no doubt, man. I mean, that just means recession's coming at us. Stay right there, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow is down 575, Nasdaq's off 123, S&Ps are off 59. Let's go look at the SPY for a second. I'm just curious whether we probably got the volume on the SPY intraday also. Let's go look at it. Yeah, you did. It's a mind blower. Look at this, folks. Yeah. What's out in the ABC down markets, folks, are fast and furious. So you can see this here, okay? The biggest one, if I take the bar before it, that's 1.7 million. You broke it with 2.5 million. Yeah. Okay. The accelerations. This is a monster, man. I mean, look at on the SPY. You're talking about what's that? 400, and that's so it's $7.50. That's going to get you to 386.50. So let's go to the NQs and just see if they're getting closer. So the NQs aren't down that bad, actually. 136 is not a whole bunch for the NQs. Here we go. We're going to go after it. Okay, let's see what we got. So the first leg. How many minutes here? Well, there's 3 minutes in this bar, and this bar is going to need. Well, it hasn't broken it yet. So the bar is going to need 14,000 contracts. Last bar we only did 8,500. So we might, you might just test it and reject it at this particular point. If that's what we get, what you're going to want to do, particularly if the S&Ps. The S&Ps broke. The S&Ps are going. That's the bottom line. They broke, and they broke with conviction. And this is what I want to say. This is where, when I was talking about the aspect of the October low, and let me put the indice up again, because this is just so you can understand a larger picture how this works in bear markets. Okay, so we have the October low that was laid out there. Okay, the cash low was 34.91, right? So you first do, as we come off that low, you do a nice bounce, man. You do a huge bounce. That bounce there almost was a 0.618 bounce, right? Before any pullback. The first bounce was 50% flat out. You pulled back about 50%. Then you went up another 50%. Bottom line is that when people get comfortable, right, it looks to me that people have got comfortable up here, okay? There's always new money coming in. They got comfortable. This is when it gets really dangerous. The reason it gets really dangerous is that as the market sells off now, you have a double banger. The first banger is that for the whole year of 2022, market's going south, right? Second part of it, people think that, okay, I think it's all right now. We can get back in, and then bang, they get hit again. That's when you get downdrafts that, are way too much. That's how it works. If we go to the diamonds and we take a look at the diamonds, as one of our targets saying to look at, bottom line, oh yeah, look at this. The diamond, you don't even have to be into technicals to look at this wide-ranging bar. Well, first off, look at this. So the diamonds we're going into, and the diamonds, folks, are the ETF for the Dow. The diamonds are going into 5.4 million. What we did out here, we did 3.4. Now, and we come off that with 4. The diamonds are going all the way back down, man. Well, down at the bottom is consolidation. That's how it looks to me. Now let's do the small caps. We'll take a look at the IWM. That's just a failure on price at all the highs. Like in spades, man. Pretty amazing, actually. And I believe, let me look at this for a second. I believe what's also going on, I heard this on Bloomberg on the way back in, and they were saying, let me see this. I wonder if the cash, I'm sure you Tigers know this, okay? Is that every time, I see, yeah, that's what's happening too. Every time, now, you know, every time you go up to the 200-day moving average, folks, it's failing. It failed in November twice, and then we just had another failure. You know, that says quite a bit. You know, not that I use the 200-day moving averages in a big way, but the bottom line. Okay, Euro futures. Okay, sure. Let's take a look at the Euro. So we have a couple calls for the Euro. So the Euro is trading 107. That's been, so 3 months, we've gone from 95 to 107. Now, you get a failure out here today. Well, and you heard, you know, my take is that the dollar's going to bounce, folks. And the way that you look at this, okay, is that the way because you do not have volume on currencies, folks, okay? So you know what my gig is. My gig is price and volume. I want to know how many people in the store, where's the supply and demand. That's all I look at on a continual basis. Now, if we don't have it, then, you know, bottom line, you go back to the trusty, you know, what are the retracements when you're using a Fibonacci expansion and contraction theory? Well, I would say that, you know, your 0.382 says that the euro can go back to 104. You know, you had a failure up here today as the dollar rejected lower price, the euro rejected higher price, okay? So bottom line, that says you're going to get a pullback, and the real question is that, you know, okay, what type of a pullback it is, and we don't know what type of a pullback it is. That's the bottom line, you know. Or we don't know, like, is the dollar going to get stronger? My speculation it is, and like kind of looking at the market today and how it reacted this morning, well, it's, you know, the dollar is game again in a huge way, meaning that this market cannot stand, you know, a strong dollar anymore. That's, you know, it used to, you know, the bottom line, we know that the dollar kept climbing, market kept climbing. Well, everything climbed, right? That's, you know, that whole mantra about the 60-40 bond portfolio blows my mind. I can go back 30, 40 years, and that blew my mind then, folks, okay? Because I never could understand, like, because since I've been in the market, when things go down, everything goes down. When they go up, everything goes up. It's like, what are you talking about, 60-40, man? I mean, it's like, that's the markets. These markets have moved together since at least 1998, at least. You know, before that, you know, maybe they didn't. But since then, these markets have always moved together. There's this, you know, you throw out the good babies, you throw out the bad babies, they throw everything out, man, when this thing's going south. So let's just go over to the NQs again, because this is going to get interesting, because, you know, the NQs as well as the oh, look at the volume though, unbelievable, man. This is crazy. It's going to break it with volume, man. This is crazy. Look at this bar we just got. The bar is 17,000, and the biggest bar over here is 14. We're going south. Bye-bye. Unreal. You know, I'm saying unreal, folks. No matter how many times I see this, it blows my mind. You know, especially big downdrafts, because if you got to stay, I'm telling you, man, you don't have to stay with the ABC, but don't go against it, because if you go against it, you know, you might as well just rack your head against the wall, man. Dow Industrials right now down 600, Nasdaq's off 120, S&P's off 59. Stay right there, folks. We'll come right back.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selected stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's down 612, Nasdaq's off 125, S&Ps are off 60. Now, something to remember, folks, okay? When you have intraday ABC downs like this, okay, this is going to continue in the morning. That's how these things work, okay? So if we go over to the E-mini again and take a look at this, okay, the bottom line is that, you know, as you're home tonight, do the calculation yourself, but they don't disappear. That's my point. I'd always love, I can tell you what I love, right? You see, so I know I got a confirmed ABC structure down, right? Even if the futures are up here, even at like 39.71, which is another 30, 40 points tomorrow, I call that a gift from the trading gods, because then you have a complex ABC structure. You line the same thing up, folks. You're going to see, pre-market, pre-Dow industrial market, they're not future market. You'll see how the volume is, but you got to remember where that price projection is, because that is a much higher probability that that's where you're going to go. And there's no doubt we're in the probability business. We take a look at the NASDAQ composite, no, the NDX rather, not the NASDAQ composite, and what is that low there? That's 481. Yeah, you got it. You got an ABC down. Now, it's not moving much, but don't let that fool you, man. It broke it with volume, and it broke it with good volume. It's 17,000 contracts versus 14,000 contracts. That's big contract volume. So that tells me that we'll wake up in the morning, more than likely you're going to stay, more than likely we're going to see overnight is this. You're going to see the dollar continue higher, futures continue lower. That's how this market's setting up right now. And, you know, we'll see if we get an expansion of volume tomorrow. Volume-wise out here inside the indices today, we got it's only 587, so that'll do 900. And if we go to the composite, that'll do about 5-1. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m., folks. And if you haven't been in the Tigers Den, it's $1 for the year. Go in there. You're going to love it. Look at them, folks.
Building